Okay, welcome to one more video about Canadian tax. Today we're going to tackle Canadian tax administration. Now I know it sounds super complex, but I promise we're going to turn all those rules into clear, simple points that you'll actually remember. So let's get you prepped. So here's our game plan for today. We're going to walk through the entire journey, starting with the big question, do you even have to file? Then we'll get into your key dates, the whole installment puzzle, what happens if you get it wrong, the penalties, and finally what to expect after you hit submit. Let's do this. All right. First things first, before we even think about deadlines or anything else, we have to tackle the most basic question, that is, do I even need to file a tax return? Okay. Now this is the first big thing you absolutely have to remember. The rules for individuals are different from the rules for corporations. They're not the same. So let's break down exactly what makes each of them have to file a return. So for individuals filing a T1 return, these are the key triggers you've got to know and look closely. It is not just about owing tax. Did you sell some stocks you have to file? Do you have a balance under the home buyer's plan you have to file? Or what if the CRA just sends you a letter demanding one? You have no choice. So remember, it's not about whether you think you're getting a refund. Now, switch gears to corporations filing a T2. The net here is way, way wider. The corporation has to file a return if it was simply a resident of Canada, or if it carried on any business here at all. Think of it like this. For corporation, a lot of times just existing in Canada is enough to mean they have to file. Okay, awesome. So now you know if you need to file. Let's move on to the when. Honestly, getting the dates wrong is one of the easiest ways to get into hot water, so let's make sure these are locked into your memory. These are the three main filing deadlines you have to memorize. April 30th. That's the big one for most people. But here's a key exception. If you or your spouse has a business, you actually get a bit of a break. You have until June 15th to file. If it's a deceased taxpayer, the deadline is the later of 6 months after the date of death, and normal filing deadline April 30th. And corporations, they're on a totally different schedule. They get 6 months after their fiscal year end. Okay, listen up, because this is a classic mistake, that June 15th deadline for people with a business. That is an extension to file your paperwork. It is not an extension to pay your taxes. Any money you owe is still due on April 30th period. For corporations, the balance due is 2 months after its fiscal year end, with exception for certain CCPCs, that is 3 months after year end if the CCPC claimed small business deduction in the current or preceding year, and the taxable income of the preceding year did not exceed $500,000 for the CCPC or its associated group. All right, let's build on that. We're wading into some deeper water now with tax installments. Just think of this as a prepayment plan for corporations or people who don't have tax taken off their paychecks during the year. You know, like freelancers or self-employed professionals. So how do you know if you have to pay by installment? Well, it all comes down to this one magic number, $3,000. The rule is if your net tax owing is going to be more than $3,000 this year, and it was also over that amount in either of the last 2 years, then yep, the CRA is going to say you have to start making these prepayments now. This is a huge takeaway. The CRA actually gives you options for how to figure out your quarterly payments. You can base it on what you think you'll owe this year, what you actually owed last year, or a combo of the 2 years before that. And here's the best part. You are allowed to choose whichever option gives you the lowest possible payment. That is a really big deal for managing your money. This little table is perfect for your notes. You can see right away that individuals and most small Canadian companies pay quarterly. Bigger corporations have to pay monthly. But check out that last column. That's the theme here. No matter who you are, the system is built to let you use the calculation that saves you the most money up front. Okay, let's talk about this scary part. What happens when things go wrong? You can think of this as the don't do this section of our explainer. We're talking about the painful and very expensive consequences of filing late or making a bad mistake. So if you're late for the very first time, the penalty is immediate. It's 5% of whatever you owe right away. Then they tack on another 1% for every single full month that you're late, up to a maximum of 12 months. Just think on a $10,000 tax bill, that's a $500 penalty on day one, and it just gets worse from there. But what if you've done this before? Well, if you've been late in any of the last 3 years, the CRA has a long memory. The penalties double. The instant hit jumps to 10% of what you owe, and that monthly penalty climbs to 2% for up to 20 months. The lesson here is pretty simple. Don't be a repeat offender. It's very expensive, very fast. This phrase, right from the Income Tax Act, is one of the most important things to get about risk. See, normally the CRA only has a certain amount of time to come back and audit you. But if you make a mistake because of, and listen to these words, neglect, carelessness, or willful default, well, that's a pretty low bar. It's not outright fraud, but if that happens, the time limit just disappears. They can reassess you any time. The clock is gone. Okay, so you filed, you've paid, you made it through, you're all done, right? Well, not quite in our last section. Let's look at what can happen after your return is already with the CRA. So as long as there wasn't any carelessness, how long does the CRA have to take a second look at your file? This is what we call the normal reassessment period for you as an individual, and for most small Canadian corporations, it's 3 years. For bigger corporations, it's 4 years. Think of it like a countdown clock. Once that time is up, your tax year is generally considered closed for good. So what if the CRA does reassess you, and you look at it and think, no way, this is wrong? Well, you have rights, and your first most important move is to file something called a notice of objection for your exam. You have to know the deadline. You have exactly 90 days from the date on that assessment notice to file it. It's your official ticket to start the appeals process. And there you have it. That's the whole journey from figuring out if you have to file all the way to the appeals process. We've hit the who, what, when, and the what happens if, so as you wrap up your studying, I'll just leave you with this to chew on. Now that you know the rules, is the tax system just a process you have to follow? Or is it more like a complex obstacle course? Knowing the rules is your key to getting through it. Thank you for watching this video. If you found it helpful, don't forget to leave your like and subscribe for more videos like this.